investing, dividends, stocks, buybacks, stock exchanges, indexes. Oh no! What is all this confusion? Let's recap and start from the beginning.
This is the Intelligent Investor.
In today's video, we will explore the world of investing. We will try to define what stocks are and how can we buy great business to make profit. Let's start by understanding what stocks are. Imagine you own a pizza shop in central Rome, right next to the Colosseum. Business is going good, clients are happy, and after much consideration you decide to export and expand your business to Florence. You're happy and excited. You're looking forward to going in Florence and buying a new show. Oh no! You don't have enough money to buy a new shop in central Florence. What do? Well, you could go to a bank and ask for a loan, but the manager of the bank is your worst enemy from college. He will never borrow money to you. So, should you give up? No. Here's when stocks enter the game. Many customers of yours love your pizza and trust your project. They would love to invest in your business. How? By issuing shares. Yes, you can sell a small percentage of your business to investors to raise money and open your new branch in Florence. Continuing with this simple example, we can think of our business as a big pizza, where different slices represent shares of the business. Investor can buy slices in order to buy a percentage of ownership for a specific business. Formally, a share is a unit of equity ownership in a corporation or financial asset. The owner of one or more shares in the company is a shareholder, or stockholder, of the corporation. Finally, a share is an indivisible unit of capital, expressing the ownership relationship between the company and the shareholder. Although the concept of shares is wide, we will only refer from now on to publicly traded stocks, i.e. to shares, who are exchanged on a stock market. A stock market, also referred to as bourse or stock exchange, is by definition an exchange where stockbrokers and traders can buy and sell securities, such as shares of stock, bonds, and other financial instruments. The biggest stock exchanges in the world are the New York Stock Exchange, the Nasdaq, Shanghai Stock Exchange, and Euronext. The first two are both U.S. stock markets and are by large the undisputed world leader with a total market capitalization of over $44 trillion. Euronext, on the other hand, is a pan-European bourse created in 2000 from the union of different European bourses. The most notable being the Amsterdam Stock Exchange, the Borsa Italiana, or Italian Stock Exchange based in Milan, and the Paris Bourse. Another three smaller, but still worth mentioning, stock exchanges are the Japan Exchange Group, the London Stock Exchange, and the Deutsche Börse, or German Bourse. At this point, we can ask ourselves, why should we buy stocks, or even, why should we invest? As this is a complex question, we will deeply explore and further investigate these questions in a separate video. For now, however, we can anticipate that investors, shareholders, take part into the distribution of profits. Thus, by investing in a company, we usually expect that business to grow with time. Let's go back to the pizza example. The pizza shop issued 100 stocks and sold 40 stocks at $500 each. We bought 20 shares, and we now own 10% of the entire business. The new pizza shop opens in the center of Florence. Business is great, and by the end of the year, both shops' total profit amounted at $100,000. Of these $100,000, 70% is reinvested to buy new machineries and pay some debt, while the remaining 30% is distributed to shareholders. This form of distribution is called dividends, and we will be discussing these in the next video. As we own 10% of the total business, we will receive 10% of the 30%, that means we will receive $3,000 cash. Obviously, this is a very simplistic example. However, let's now look at how we can buy and sell publicly traded stocks. To do so, we need to make use of a brokerage firm. A brokerage firm or brokerage company is a middleman who connects buyers and sellers to complete a transaction for stock shares, bonds, options, and other financial instruments. Brokers are compensated in commissions or fees that are charged once the transaction has been completed. Some examples of stockbrokers include Fidelity Investments, Interactive Brokers, and E-Trade. To start investing, we are simply required to open an account on one brokerage firm and deposit money. However, this is not financial advice, and you should always do your own research before starting investing. Before concluding, let's look at some basic metric of the world's biggest publicly traded company. Apple. Apple, with ticker AAPL, is an American multinational technology company that specializes in consumer electronics, software, and online services. It has a market capitalization of $2.63 trillion. Currently, Apple has issued a total of 16.86 billion shares, and each share costs about $164. For each share, the company pays a quarterly dividend of 23 cents. Apple is traded on the Nasdaq Stock Exchange, and since its launch in 1982 has returned a total profit of 204,099%. This is our first video on this channel. If you like this type of video, please like and subscribe to the channel. Also, write in the comments section what can be improved and what would you like more to see in the video. In the next video, we will talk about dividends. Thanks for watching. Bye.
This is the Intelligent Investor.